Very good morning, students. Our session of Financial Management 1. Now, as far as our previous session was concerned, in the last session, we have completed major two financial institutions, that was S.I.D.C, that is State Industrial Development Corporation, and UTI, that is Unit Trust of India. Today again we are going to see the another institute which performs the major role in the industrial growth of Indian economy, that is I.I.B.I. Now I.I.B.I stands for Industrial Investment Bank of India. Yes, from Industrial Reconstruction Bank of India were restructured and some amendment were made in it on 27th March 1997, and Industrial Investment Bank of India Limited started functioning. So, before the establishment of I.I.B.I, I.I.B.I was known as I.R.B.I. I.R.B.I stands for Industrial Reconstruction Bank of India, and after the modification in R.I.B.I, now it is known as I.I.B.I. This is for the construction purpose. Now this bank is going to enhance the investment options, the various investment options for the construction and for the reconstruction purpose of industries. So they are going to give a maximum finance to this construction industry separately. So main purpose of I.I.B.I, that is to provide maximum to maximum finance in the construction industry itself. Under the Companies Act, it was activated with the complete objectives of development. Yes, now development of what? The development of construction industries. The assets and liabilities of R.I.B.I were transferred to I.I.B.I. It is but obvious when I.I.B.I comes into the practice, they are using the investments, they are using the assets and liabilities of R.I.B.I, and with the help of that assets and liability, they are there to serve the economy of India. In other words, it took over R.I.B.I considering its financial sources. It can be said that I.R.B.I's paid up capital is of rupees 75 crores as preference shares, rupees 224 crores fund, and profit of rupees 112 crores. Now this is all about the capital of R.I.B.I, which is transferred to I.I.B.I. Now we'll have the liability side. The borrowed money from the government of India and R.B.I to the tune of 186 crores, and debentures and bonds worth rupees 1,175 crores. So these are the main liabilities of R.I.B.I, which is transferred to I.I.B.I. So I.I.B.I enjoys total assets of R.I.B.I and I.I.B.I is highly obliged for the payment of liabilities of I.R.B.I. Now we'll talk about the management side. The management of the bank is carried out by the BOD, and the chairman of the board of directors is appointed by the government of India. Yes, I.I.B.I is wholly owned by the government. So there is a total control of central government over I.I.B.I. who functions as the managing director. The government of India who appoints the directors of I.I.B.I. They are going to work as the managing director of the same institute. The deputy governor is appointed by RBI. Now, in a nutshell, we can see that central government and RBI have total control over I.I.B.I. So, I.I.B.I is not able to make any decision without a prior permission of central government and RBI. The functioning of Industrial Investment Bank of India include restructuring of industries to activate them like it is a similar industry, to come forward for development, and to find out the reason of downfall of the industry and remove it. Yes, I think this is one of the major reason behind the establishment of I.I.B.I, that is to find out the reason why they are not performing well, why they are not able to generate maximum profit in the market. So here I.I.B.I is going to find out the reason behind the downfall of the particular industries, and when they comes to know about the main reason that why these industries are falling, and they are there for the best possible options for the downfall of the industries, and they are there for the removal of it. Yes, with the research, with the development, I.I.B.I give a maximum options to the industries for raising their standards, and with the help of that option, industry is able to grow more. Again, other than that, I.I.B.I is there for the development of the industries. Yes, when the organization is there where any industries are there, but somehow they are not able to perform well, they are not able to grow. Yes, profit maximization is totally another point, and development and growth is totally another point. If you are earning, but if you are not developing yourself, then there is a maximum or there is some major reasons behind that. So when one earns, they leads to develop. But sometimes it is possible that if industries are earning a handsome profit, but due to some external forces, due to some external reasons, if they are not able to grow, they are not able to develop themselves, then they need to find out the reasons behind it and going to solve the reasons of non-development of the particular industries. So these are the main functions that I.I.B.I. is performing for the upliftment of industrial growth and development. Basically, I.I.B.I. carries out the functions of providing financial help by long-term loan for development. Yes, development is never be a short term. So, with the help of short-term fund, organization is able to run their business smoothly. But for the development, they need to take a long-term loan, and through that loan, organization is there to take the advantages of this kind of finance. So this is all about I.I.B.I. I hope it is clear to you. Now, the next financial institution that we are going to learn is S.I.D.B.I. 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 stands for Small Industries Development Bank of India. Yes, the name itself suggests this bank was established for the purpose of industrial development of small sector. They are focusing on small, tiny and cottage industries only, because these kind of industries do not get maximum fund from the normal financial institutions, because their working is good, but they are not able to earn more, they are not able to grow, they are not able to develop when the large scale industries are there in the market. So this financial institution is for the upliftment of small industries. When you are going to help the small industries, it definitely support the large industries. So the growth and development of small and large industries are possible. So, large industries get finance very easily from the market, because their workings are sound, they are there for the number of years, so they do not find any problem as far as the fund raising mechanism is concerned. But it is really very difficult for the small industries to get easy finance in the market. The main reason is that they are in the industry, they are in the economy for the limited period of time, and within this limited period, the industrial growth, the industrial development is not possible for them. So when growth is not there, when development is not there, the credit worthiness of that particular industry is very low, very down, because within the short period of time, industry is not able to cover the whole market. and when the market is non covered, so they are not able to sell their product in a proper manner. When the sales is not there, they are not able to generate maximum profit, and when the profit is not there, they are not able to develop their self. So this is the cycle that why small industries required maximum finance as compared to large industries. Again, large industries, they have the latest machineries with them. So with the help of this technical advance and with the help of this maximum machineries, they are able to cope up with the raising market standards, and with the help of their maximum production, they are able to fulfill the maximum demand in the market. So this is one of the main strongest characteristic of large scale industries. Now governments are really very worried about the small industries, because if they are not growing, then they do not, or they are not able to support the large industries. Each and every industries are dependent on each other. Large scales are dependent on small scale for their raw material requirement, for their machineries requirement, and small industries are totally depends upon large scale. If large scale industry is working in a proper manner, then automatically small industries get their demand, get their products demand in the market. So the development of small industry is highly needed. So without the development of small scale industries, we are not able to grow our total industrial growth in our economy. So now let's start S.I.D.B.I. S.I.D.B.I was set up in April 1990. It is a subsidiary unit of I.D.F.C, that is Industrial Development Bank of India. I.D.F.C is there for the growth and development of each and every industries in a proper manner. But S.I.D.B.I is there for the small industries only. S.I.D.B.I provides financial assistance for the establishment and development of small scale industries. S.I.D.B.I do not, the main task of S.I.D.B.I, that is to provide the finance, but apart from it, they helps the small industries for their establishment purpose. And when some industries or some financial institutions are there who helps for the establishment, then the small industries are able to grow in a proper manner. It also provides financial assistance to those institutions engaged in the development of small scale industries. Now S.I.D.B.I is there for the help of other financial institutions. and they are helping which financial institutions? Those financial institutions who are there in the development of small scale industries. The main source of fund for S.I.D.B.I is I.D.B.I. That is but obvious, because I.D.B.I is the main financial institutions and S.I.D.B.I is its subsidiary unit. S.I.D.B.I provide finance for the technology development, for the modernization purpose, and for the pre-shipping credit in foreign currency. It also functions as venture capital financing. Now, apart from I.D.B.I, there are other sources through which S.I.D.B.I gets the maximum funds, and that sources are market and the central government. So, this is all about S.I.D.B.I. I hope you all are clear about this concept. Now, the next point, that is EXIM Bank. The name itself suggests EXIM Bank. EXIM Bank is a bank for import and export. Those industries which are engaged in import and export, so this bank is for them. EXIM Bank provide maximum financial support to this kind of banks. Now let's start about the explanation part of EXIM Bank. EXIM Bank was established on 1st January 1982. The main purpose, the main objective is to become useful to the industries and coordinate with the financial organization for its financial requirement. Now, this kind of financial industries provide direct finance to those companies, to those organizations who engage themselves in the export and import of a particular product or a particular services. EXIM Bank also makes efforts for the development of those organizations concerned with providing finance for import and export business. Again, EXIM Bank gives a proper guidance or guidelines to the entrepreneur who are connected with or who wishes to have a business of import and export. EXIM Bank provides loans under different plans, which include export bill rediscount plan, export refinance bill plan, financial assistance as well as the guideline for the business development. So it's all about EXIM Bank. Now the last financial institution that we are going to learn today is I.D.F.C. I.D.F.C stands for Infrastructure Development Finance Company Limited. This industry is for the development of infrastructure of our economy. It is for the industrial infrastructure facilities. When the infrastructure of the particular business concern is sound, then that business is able to grow fast, and when the growth is fast, the economic development is also there. So infrastructure facility is one of the basic facility or basic need for the organization. So here the government focuses on the development of infrastructure in our Indian economy. Now we'll see about I.D.F.C. As per the recommendation of Dr. Rakesh Mohan Committee, appointed for the project of infrastructure commercial export groups, the main objective is to provide finance to the units related with the development of infrastructure. Yes, I.D.F.C provides direct finance to those industries, to those companies which is engaged in the development of infrastructure of economy. I.D.F.C was established on 30th January 1997. I.D.F.C has been developed by getting concerned with the government of India. So it is totally owned by central government. I.D.F.C is totally and 100% relate with R.B.I, I.D.B.I, U.T.I, I.F.C.I, I.C.I.C.I, H.D.F.C, S.B.I and overseas financial investment. So it is clear that I.D.F.C is related with each and every financial institutions which provide finance to the industries for the different purposes, and the main purpose is the development of economy. I.D.F.C provides loans to the projects connected with the development of infrastructure in India. It is concerned with both commercial and structural type of risk. The function is to ensure that the plan of infrastructural development may run smoothly. So, this is all about the activities of I.D.F.C. Now, as far as today's session is concerned, here we are ending our session with the explanation of each and every financial institutions in detail. Now, as far as the special financial institutions are concerned or the development banks are there, we learn total 10 different financial institutions in a proper manner. I am just saying the name or I am going to point out the name of these financial institutions which we have learned. The first one is Industrial Finance Corporation. Then after State Financial Corporation. The next one is Industrial Credit Investment Corporation of India. Then after Industrial Development Bank of India. Then after State Industrial Development Corporation. The next one Unit Trust of India. Then after Industrial Investment Bank of India. The next one Small Industrial Development Bank of India. Then after Industrial Development Infrastructural Development Finance Company Limited. And the last one is EXIM Bank, that is Export Import Bank. I hope you all are clear about the financial institution who are there for the development of Indian economy, or we can say that they are there for the industrial growth, for the industrial upliftment. Now from today we are going to see, now in the next session we are going to see the commercial banks and other points of our particular unit, that is unit number 3. I hope it is clear to each and everyone. So here I am ending our session. Thank you so much.